Canadian real estate is keeping the country afloat. A massive influx of money has found its way into real estate, all the way down the line with the construction companies, the hard materials, the imports required, real estate agents, banks, brokers, and everything else all rely heavily on a perpetual boom in real estate. Of course, nothing will change this course, right? Well, you came here for the truth, so let me unveil that for you. Today we are going to look at the Canadian real estate market, and then I'll show you a few other points. Let's begin with this article out of CBC. Royal Bank has boosted interest rates on some of its mortgages ahead of an expected increase in the key benchmark rate by the Bank of Canada. So potentially following suit with the Federal Reserve, they will increase interest rates. They'll do so at a very small amount, and they are actually sitting at 0.5%. So they are quite significantly lower than the Federal Reserve, which is near record lows. And they say that they're going to do this, but the bank, Royal Bank that is, has decided to take a step ahead and increase the mortgage rate. So we're looking at 20 basis points. So that's not a big deal. But if they do what the Federal Reserve has done, and that is slow incremental increases, there will be a certain point where that begins to crush people. And it's just a matter of fact. I mean, you get to that range of 4 to 5% on a mortgage, people cannot afford it. It's simple math. They don't have the money to do so. In a previous video that I did talking about millennials not being able to afford a home, I think people really got the wrong idea of that video. But essentially, what we're looking at is people being able to afford homes now because they put very little money down. They don't put 20% down, and they're proud of that. They put the minimum amount down, 5% or less, and then they're getting these with relatively low interest rates. I mean, if they're putting 20% down, they're obviously going to get a better rate. But regardless, they're getting these with low interest rates historically, and they're doing so thinking that, look, interest rates will remain low, prices will continue to rise, I'll be fine. And that's just not the way it works. So let's look at the details here. There's a couple of points I want to make from the next article, which is out of the Globe and Mail. Canada's banking regulator is proposing that anyone who gets a mortgage or at a bank or a bank-funded lender prove that they can afford a rate that is at least 200 basis points higher than their actual rate. So that's this stress test. They want to make sure people can handle it. I don't believe it personally because we've seen all the fraud that has been taking place. It's not exactly something that the banking establishment should be pushing around, but they do. They allow it to happen. It's fact. And look, variable rate mortgages are a big part of many people who are involved here. Okay, they've been buying at a variable rate. This is going to hurt people because if they leave it in there, they are going to find that things get more expensive, and it gets to a point, maybe 4%, maybe 5%, and you start to have a large amount of people going bankrupt. People can't afford a higher rate. It's a simple matter of fact. All right. If you believe the Bank of Canada's hints and the bond market probabilities, there's a real chance you will see higher floating rates as soon as next week's rate meeting or at its meeting in September. I don't know when it's going to happen. They always push it further and further down into the future. Look, the problem is very, very simple to look at. You don't need to be a genius. You don't need to be part of the Bank of Canada or the Federal Reserve or whatever. You need to know the simple fundamentals. How much people have in their savings, how much people are willing to put down, what they're currently paying, and then what will be the result of an increase of, let's say, every 0.25%, or let's say at a 1% increase. Look at that and you will simply see there is a point at which you start breaking people's backs, and it doesn't take much. Because the leverage that has happened right now is the highest ever in history. Everything right now, it's fine. The stock market's going up. The housing prices in most areas are going up. You're witnessing that. But why? Because interest rates are so low. It's free money. It's free money. People are buying on margin in their stocks. People are using all different ways to extend on what they have, and they're proud of it. Most people are proud of it, and that's fine. If you're making a lot of money, I hope you'll be able to get out at that peak. You're going to be smart enough to get out that peak, right? Well, let's see what happens. Anyway, looking at this here. Manhattan, extremely expensive. Right now, you're looking at the apartment prices hitting average $2.19 million. It's extreme. It's gone beyond normal. It's gone beyond what we see in many other areas. But there are a few that have been escalating higher and higher and higher, and it's skewing the averages. In fact, that's how high it is. You see a lot of wealth that is in Manhattan, but you also see a lot of poverty. So what I believe is happening is the wealth is being transferred from the elite, from the poor, from the middle class, over to the hands of the elite and the richest of the rich. Yes, a lot of people are buying on big loans. There's no doubt about that. But there are many people who are very, very wealthy now at this time. So that's essentially what I see. It's like the same total amount of wealth in a way, but at the same time, it's a lot of people have become poor, and then that money has found its way into the hands of the people buying homes worth $2.19 million. CBO, spending will top $4 trillion for the first time this year. Spending will increase. Guess what? It's going to increase next year, and guess what? It's going to increase the year after. It has to. Spending has to increase. Deficits have to increase. The amount of total debt has to increase. That's the way the system works. It must increase at all times, but have no fear because we owe it to ourselves. That's what I keep hearing anyway. You tell me. Do we owe it to ourselves, or do we owe it to a semi-private, quasi-government institution known as a central bank? Norway's voluntary tax plan brings in just, wait a second, $1,300. So here you have a voluntary plan. Look, if you want to pay more taxes to your slave owners, then you can do so. And that's what happened in Norway, already an extremely heavily taxed nation. And they said, look, if you want to pay more, you could do so. You can do so. In Canada, they have something called the First-Time Home Buyers Plan, where you can dump money into a garbage RRSP. That's, let's say, like a 401k. You can do that. You can dump your money in, and then you can pull it out tax-free to put on your home. So I had done that years ago. Very small amount anyway. I didn't trust RRSPs to begin with. The reason I did so, though, is knowing that I have a first-time home buyer. So I pulled the money out tax-free, and then I put it down on the down payment. So knowing that I was able to do so tax-free, they would come back, though, because they tax you every single year. But I'm fine with that because I didn't have to put my money into this garbage system. I was able to keep it in there for a short period of time, pull the money out when I needed. It was a tax-free, but now I'm getting taxed on it. You could put your money back in. That's basically the way they say. You have to put a certain percentage back in every year. I'll take the tax. No problem whatsoever. Tax me now. I don't care. I'm not going to put my money back into this foolish system. Don't pay the taxes if you can get away with it. But if you have to pay, just understand that as long as you are, doing something like what I did, where you can use a temporary loophole to get around it, that's fine. It's all fine. You don't want to have yourself behind bars if that's the way it's going to be. A lot of people are finding their way around the tax system. I'm not advising any of that, but do what you got to do, That's all I'm going to say. If you found this video informative, please give me a thumbs up. Last but not least, if you found the video informative, I know you will find my books, The Money GPS, and my new release, Global Economic Collapse, even more informative. So you can flip through these books. There's a link in the description to Amazon where you can flip through the pages for yourself to see if you're interested. Take care.